Good afternoon and welcome to NYFP. In midday trade on this Thursday, the equity market rally continues with the Dow and S&P 500 touching record highs. Joining me this afternoon is Sandra Navidi of BeyondGlobal, and we'll be talking about global fundamentals. Good afternoon. Thanks for joining me.
Thank you, Remy.
Well, this week focus has been on earnings, economic data releases, and of course Bernanke's testimony down in Capitol Hill. Now it's all about a central bank stimulus supporting global equity markets. So has anything happened this week to change your overall outlook?
No, we still think that the Fed will taper later rather than sooner. Bernanke kept all options open, but I think he put more emphasis on downside risks. And so I think that points to the fact that they will be careful with the tapering as well as the interest rates.
And Sandra, if we look at the equity market reaction, we can see that markets are reassured with no change in terms of the commentary out from Bernanke. But we've been seeing some other economic indicators out there. Earlier this week, the OECD came out with its employment outlook, and the results were less than heartening. We're seeing some of the PIGS nations continue to see double-digit percentage unemployment rates. So going forward, where are your concerns? And do you think reforms as well as macroeconomic stimulus measures will help bring the unemployment rate down?
I think unemployment rate in the Eurozone is the number one worry. Put that in context with the aging population and you see it's not sustainable. You have all these young people who can't build lives without jobs, and what are they going to do? So I think politicians, governments need to work together to coordinate structural reforms and macroeconomic reforms.
And Sandra, while unemployment remains a concern on both sides of the Atlantic, here in the U.S. We've been getting some economic data releases, and one thing we're seeing is that gas prices are affecting the way that consumers spend here in the U.S. Today we're seeing the front-month crude oil contract edge near the $108 a barrel level. So do you think this will affect the consumer going forward, and how concerned are you?
We're always concerned about energy prices, but energy is something that's beyond our control. And I've spoken to good CEOs from energy companies, and they've said, off the record, nobody can predict oil prices. It's virtually impossible because there's so many different aspects that factor into the pricing, speculation, manipulation. So I think we need to focus on problems that are actually where we have control, like unemployment, and start to work on that.
And prices also depend on consumption and demand. Speaking of which, let's take a look at China. Now, we can't forget that earlier this week we got mixed economic data on retail sales and industrial production, but I think all eyes were on those growth figures for second quarter GDP. Well, compared to the rest of the world, they did show more expansion at 7.5%, down from the previous quarter. But going forward, what is your outlook for China?
I think we'll be okay this year and next year as long as we're above 7%. I think we can handle it. China can handle it. They've done aggressive reforms, but they have many more to do. And then what's slightly disconcerting is the forecast from the IMF that has said by the end of this decade they could be at 4%. Now that would be a little bit of a catastrophe. So there are risks, particularly in the financial sector, but they're not immediate. So we need to coordinate with them and see that it remains stable.
Okay, Sandra, well, thank you so much for joining me, and thanks for weighing in on all these key topics.
You're welcome. Thank you.